Ford is a giant in the world of cars and trucks, with a name recognized all over the globe. Every day, millions of people rely on Ford vehicles to get to work, take their kids to school, or go on adventures. Ford is also a public company, which means its shares are traded on the stock market. Anyone, from a college student to a retiree, can buy a piece of Ford by purchasing its stock. These pieces are called stocks, and owning them means you own a small part of the company. People buy stocks hoping to make money as the value of the company grows. If Ford does well, the stock price can go up, and investors can profit by selling their shares. Investors also hope to receive extra money from the company, which is paid out as dividends. A dividend is a reward for owning stock, and not all companies pay them, but Ford often does. Ford has a long and storied history, having been around for over 100 years. Over the decades, Ford has experienced both incredible success and tough challenges. Today, Ford is in the middle of a big transformation, adapting to new technology and changing customer needs. The entire car industry is shifting, with new models and innovations appearing every year. More and more people are choosing electric cars for their daily drives. Ford is meeting this demand by making electric vehicles like the Mustang Mach-E and F-150 Lightning. But even with innovation, investing in car companies can be unpredictable and risky. The stock market itself is full of ups and downs, and investing always comes with risks. You could lose some or all of your money, but you could also see your investment grow. How your investment performs depends on both the company's success and the overall market. If you're thinking about buying Ford stock, take time to learn about the company and its future plans. It's also a good idea to talk to a financial advisor who understands your goals and risk tolerance. With the right information and advice, you can decide if investing in Ford is the right move for you. Ford stock has been on a roller coaster ride. In recent years, it's been up and down. The stock price is affected by many things, including company performance and the overall economy. In early 2025, Ford's stock was down. It had fallen about 11.5% in a year, that's including dividends. Some analysts are negative on the stock. They have lowered their price targets. This means they think the stock price will go down. There are reasons for the stock's decline. Ford's guidance for 2025 was weak. They expect lower profits. The global auto industry is also facing challenges like rising costs and supply chain problems. Despite these challenges, Ford is still a major player in the auto industry. It has a strong brand and a loyal customer base. The company is also making changes to improve its business. Ford knows it needs to change. The automotive world is evolving fast, and Ford is determined not to be left behind. That's why it's making some big, bold moves to secure its future. To stay competitive in a challenging market, Ford is aggressively cutting costs across its operations. This means streamlining production, finding efficiencies, and making tough decisions to ensure long-term stability. These efforts are designed to help boost profits and keep the company financially healthy, even as the industry faces uncertainty. But Ford isn't just focused on cutting costs. It's also investing heavily in new technology, including electric vehicles and self-driving cars, to stay ahead of the curve and meet changing customer demands. One bright spot for the company is Ford Pro, its fast-growing commercial vehicle division. Ford Pro is all about serving business customers, and this segment is performing exceptionally well, providing a steady source of revenue. The division focuses on helping businesses succeed by offering reliable vehicles and tailored solutions. Ford Pro sells a wide range of vans and trucks, and also provides essential repair and maintenance services to keep fleets running smoothly. Another major focus is Ford's Model E division, which is dedicated to developing the next generation of electric vehicles. This is where Ford designs and builds its electric cars, aiming to compete with the best in the industry. The transition to EVs is expensive, requiring massive investments in new technology, battery production, and infrastructure. Ford has already launched several new electric models, expanding its lineup to attract more customers. These include the popular Mustang Mach-E and the innovative F-150 Lightning, an all-electric version of its best-selling truck. However, Ford is facing stiff competition in the EV market, with many rivals racing to launch their own electric vehicles. Tesla remains the current leader in electric vehicles, but other automakers like Hyundai, GM, and Volkswagen are also ramping up their EV production and innovation. Ford is betting big on electric, committing resources and talent to lead the industry transformation. The company believes that electric vehicles are the future of the auto industry, and it's determined to play a major role in shaping that future. The car world is going electric. Ford is going electric too. They're making a big push. They're investing billions. They want to be a leader in electric vehicles. They're making electric versions of their popular cars like the Mustang and the F-150 pickup truck. But it's not easy being green. Making electric cars is expensive. Ford is losing money on its EVs right now, but they hope to make money soon. There's also a lot of competition. Tesla is the big player in electric cars. Other companies are catching up. Ford needs to make sure its EVs are the best. So, should you buy Ford stock? It's a tough call and there's no simple answer. Like any investment, it depends on your goals, your risk tolerance, and your outlook for the company's future. There are risks and rewards to consider, and it's important to weigh both sides carefully before making a decision. On the plus side, Ford pays a dividend, which is a big draw for many investors looking for steady income. It's a big one too, especially compared to many other stocks in the auto industry. The dividend yield is over 6%, which is much higher than the average for most large companies. That means you get a good return on your investment just from the dividend, even if the stock price doesn't move much. Ford is also a well-known company with a brand that's recognized around the world. They have a long history of making cars and have survived many ups and downs in the auto industry. People trust the Ford brand, and that trust can be valuable in a competitive market. But there are also risks, and you shouldn't ignore them. The car business is tough with high costs, changing technology, and shifting consumer preferences. There's a lot of competition, not just from other traditional automakers, but also from new electric vehicle companies. Ford is spending a lot of money on electric vehicles, hoping to catch up with rivals and lead in the future of transportation. It's not clear if that will pay off or if the investment will take years to show results. The economy is also uncertain, with inflation, interest rates, and global events all affecting car sales. That could hurt car sales and in turn, Ford's profits and stock price. If you're thinking about buying Ford stock, do your homework. Research the company, read recent news, and look at their financials. Don't invest more than you can afford to lose, and make sure it fits your overall investment plan. And remember, investing in the stock market is risky, and past performance doesn't guarantee future results. But it can also be rewarding if you make informed choices and stay patient for the long term.